And you know who that's from.
I do. That was awesome.
Jimmy, welcome to the show.
Well, thanks for having me, Jay. This is I don't know if I've done too many live formats well, I have, but like this particular one, it's like, okay, I'm getting interviewed and we're going live and it's gonna be cool. So
here we go.
Very
live.
excited.
Exactly. So far, I don't think we have any viewers. So we'll see what happens. Well, anyway, thanks for coming on. I appreciate it. We met each other in Clubhouse about a year ago. I just wanted to bring on my new channel. You are the first guest. I had Preston on last week, but it was on my old channel, which I've uploaded to the new channel. So you're the first actual guest on this new channel, which is called Outside Money. And, technically Bitcoin is outside money. It's outside the system, right? And so that's why the show is called that. For those that don't know who Jimmy Song is, he is a Bitcoin core developer, programmer himself. He's an author, co-author of, I think, 5 books, Jimmy?
Oh, three books. One I wrote myself and 2 that I wrote with other people, but it'll get to 5 soon enough. Don't worry.
Also a podcaster himself. As he just said, he's a guest on many podcasts, an educator as well, an advisor, an investor, a father of 6 kids.
Yeah.
6 kids. Yeah. Cause you got me beat by a lot. I got 4 and that's a lot. So today I want to just cover a few topics. We're going to talk about Bitcoin governance. I want to talk about Bitcoin network security, NFTs. I would like to talk about, particularly coming from your perspective. And then I want to talk about Plan B's stock to flow model.
It's going to be a fun day. Be a fun
day. So let's get started. Most people that own Bitcoin, I think, actually don't understand how Bitcoin really works. They just buy it, I think, as an investment, and they don't fully understand the technical details of it. So what I'd really like for you to do from a perspective, coming from a technical perspective, can you explain to people how essentially how Bitcoin governance works and how updates to Bitcoin work? Because a lot of people don't even realize that you can even update Bitcoin. I was looking through, by the way, there's like 350 plus, I think it's like 358 Bitcoin core contributors if you look on bitcoin.org. I don't know if that's updated, by the way.
Yeah, it's not, because you can go on GitHub and the number of people that are on there is well over 500. So.
Oh, okay. Okay. Yeah. So there's a lot more than you're even seeing on bitcoin.org. Okay. And what I really wanted to understand is that the first question I have is how active are the ones that you're seeing listed, or even the ones that we don't see listed there, versus the ones that are not listed. And I looked you up, at least on GitHub, and I was just kind of taking a look real fast. And you've done like over almost 1,200 commits, which seems like a lot. But then I looked at like a top contributor, and this guy had like 1,000 plus this year. WJ Van Der Laan, is right.
Yeah,
this dude's like hardcore. Holy shit.
So that's, I think, 1,200 lines, maybe. I don't know. Like, I have like the number of commits is like less than 20 for me, but for other people, it's way more. And like lines are not necessarily like a very good metric either, because certain things do whatever. But the reason why Vladimir has so many is because Vladimir is a core maintainer. So whenever there are merges and things like that, it's he resolves like various mergeable things. Well, I don't think that's actually much of a problem, because he makes people rebase before. But he's been a core contributor for a long time, but also a maintainer. So that's part of why he's on there so often, and why he's been with the project a long time too.
Well, you have too. I looked at I think 2012 was the first thing I saw you do on GitHub.
So I've been on GitHub for a while, and like stuff not related to Bitcoin, even
like a decade plus.
So like that's part of what you kind of do as a developer, is you got to have Bitcoin commits of some kind or another, or GitHub commits of some kind or another. And I've been contributing to different projects and stuff like that, and you can look up my history. But yeah, I've contributed to a lot of different things, and it's been a long time that I've been doing that.
Jimmy, can you walk us through, I guess, the Bitcoin governance, which I guess is a system for managing and implementing changes to the Bitcoin blockchain? Can you kind of explain what that means to people, financial people that are buying Bitcoin really as an investment, but don't understand the technical side of it. We try to dumb it down a little.
Yeah. So let's start with the software, because it's important to understand what the software is doing. And a lot of people think like running a node is some magical process or something like that. But really what you're doing when you're running this software, the Bitcoin Core software and some other software that's also compatible, is essentially what you're doing is you are validating the entire blockchain. And the blockchain, of course, is just all of the transactions that have ever happened on Bitcoin. So, from January 3rd, 2009, all the way up to present day, every single transaction that's ever happened on Bitcoin is in the Bitcoin blockchain. It's currently about 300 gigabytes of data. And basically, your software checks every single one of those transactions to see if they're valid. This is what makes it decentralized. The guy at your bank, right? Like if you're lucky, maybe you get a public accounting firm that will audit it once every quarter or something like that. But really, you don't get to check it, right? Like, but Bitcoin is unique in the sense that if you're running the software, you're checking the ledger to make sure that it follows all of the rules. And that's a critically important part, because without everyone constantly checking, you really have no idea. If you're not running your own node, you don't know if it's necessarily following all of the rules and so on. And you might be deceived into thinking that it's following the rules when it's not. And this is sort of like a vector of attack and so on. So that's what that software is. And really what we're talking about here is updates to that particular piece of software, because in a way, the rules can upgrade, but it can only upgrade in a particular direction. So specifically, when software is checking for something, you check these rules and you want that to always work, because otherwise you're switching out Bitcoin from under them. And that would be something called a hard fork. Like it's completely incompatible software. And at that point, it's not backwards compatible and it's no good, right? Like everyone else that's running older software is not going to recognize this new software as the same thing. And unfortunately, this is what altcoins do all the time, because they can, to some degree. They want a new feature. It's technically easier and so on. Bitcoin has taken the hard road of going down soft forks, or sort of like checking more rules, but not invalidating any of the old ones. Hard forks are basically invalidating older ones. So that means that the software updates because you can add additional rules that it can check. And by adding those rules, you can actually add some interesting backwards compatible features. SegWit, for example, was a soft fork. It was a backwards compatible way of adding a different type of smart contract onto the Bitcoin platform. And Taproot is very much going to be similar. So the question you're actually asking with regard to governance is, how did these upgrades work? Or
Yes.
how
does it
did
happen?
these additional rules come into existence and so on? And the process is very much like in the spirit of Bitcoin, very decentralized. So you have lots of developers that are working on all sorts of things, and there's no roadmap or anything. It's done when it's done, and it gets in when it gets in, right? Like after sufficient review and so on. It's unlike all of these other coins where they're like, oh, we're going to get this in by Q3 of next year, and we're going to do this. Ethereum 2.0 being the most obvious example of that sort of like central planning. With Bitcoin, you can't have that, because the minute you say you commit to something, that means that there's a center, that there's somebody to attack and so on. So basically, when people work on features, they sort of work on it on their own, or with the collaboration of others, but there's no central committee directing it in any way. It's individuals that do it if they want to. There's no guarantee it gets in. There's a lot of people that work on features for years sometimes, and it doesn't get into the core software. There's a lot of things like that. So it starts really at the individual level. Any individual contributor can make whatever proposed changes they want. There doesn't mean that it's going to get in, but you can make the changes to your heart's content. And in fact, like a lot of people do that. And at that point you put it up for review. What you do, and that's it could be sort of like the design before you code it, or it could be the code after you code it. But at some point, you need to put it up for community review. And usually this is the part where things get stuck, because if you're not a very if you haven't contributed before and you have an enormous change, like who's going to go look at your stuff, right? Like you need people to look at your stuff, and there's sort of like it's a lot of effort to review somebody else's code. So like they're not gonna just do it to be nice. It's they're gonna need some incentive to do that. Usually it's by you having sort of contributed to core by reviewing other people's stuff first. And at that point, when you've built up enough credibility as a good reviewer, and people can tell whether it's a good review or a bad review, at that point, then you can probably you've built up enough sort of social capital to get other people to at least look at the changes that you're proposing. And at that point, if enough people have reviewed it and it looks good, then and there are no objections or anything, then it gets merged. But that process of review can often reveal a lot of different things. So if you have a good reviewer, what you're going to get are, hey, here are the things that are going to be problems, right? Like here are attack vectors against this thing. I've tested this feature, or whatever. This part isn't documented, and it's not clear what would happen in this particular scenario, and all that. And that's the process of review. It's it's rigorously looking at it and making sure it doesn't break stuff, because Bitcoin is always going to be biased towards leaving it alone rather than breaking something.
Sure.
So it's very different than, say, like the Facebook model of move fast and break things. It's move slow and make sure you don't break anything.
Right.
Because if you break something, you're
money.
like literally losing money. Like somebody, and it's not even your money, it's somebody else's money. At least with Facebook, they're losing their own money if they break something.
Right.
So that part ends up being very important, the review aspect, and things get stuck in review for years.
What is the metric around that? So it's some kind of metrics, like if you go to review, there's X number of people and then so many percentage. What's the consensus on that? Is 100%, 50, 75? How does that all work?
Yeah, so that's a little more art than science, and it depends on the changes that you're making. If you're adding like a new unit test to an RPC call or something like that, you're not going to need much review, because it's not going to has no possibility of breaking anything. You just added a unit test. And that's as long as it runs and it works, that will probably require maybe one or two reviewers and it gets in. But if it's like a deep consensus change like Taproot, say, you're going to want like 10, 15 like reviewers that have thoroughly vetted the entire concept. And that's again, depends on what it is. If it's like
who decides that, though, like whether it requires more or less? Like there's got to be
there's a community sort of consensus around it a little bit. Like if it touches consensus code, we know, right? Like it's like, okay, this is going to affect consensus or not.
So do the core developers immediately say, no, we need more votes on this or something like that, when I see that it does
more review on this, review? Right? Okay. Yeah. And usually the person that proposes the change like usually knows this in advance, and like pull requests get labeled and things like that by people that are looking at it anyway. So if it is a consensus thing, then it'll clearly get labeled consensus, and at that point it's clear, okay, you need like 15 people to look at it at least. But if it's not, then depending on what part of the code it is, it's going to have like different thresholds. But there are people that are experts in those parts of the code, right? And they'll come in and oftentimes review it if it's a significant change. If it's not, then maybe not. But it's sort of like a process of, okay, well, like these are the people that have been known to learn this part of it and have been coding in it a long time, and they're most likely going to be the ones that review it, because they have the most sort of like built up reputation in that area and so on. So at that point, like if you have enough consensus, or if all the concerns have been addressed, and if you if you have a concern, you have to express it within that pull request, saying, "Hey, like, I don't think this works," or there there are reasons to believe that this is a bad idea, or something like that for this and reason. Like, yeah, it's a back and forth. It's like, okay, would this address your concerns, or would this, and it's like sort of like this big thing. Once in a while, you'll have sort of like an irreconcilable conflict where two people will completely just disagree on a particular approach or something like that. So like within Taproot, for example, there was like the method of activation using BIP8 versus BIP9, and this was a huge controversy, even though it's like super inside baseball stuff, right? Like here's a time warp attack that you can pull on the BIP9, and there's this other attack that you can do, and it was.
I bring this up because I have a friend.
Uh-huh.
He's a smart guy. He's a programmer himself. Built an ad tech company, sold it. He did really
Mhm.
well. We were arguing, debating back and forth between. You met him actually on Clubhouse. I brought him up one time, and you might remember it. I don't know if you do, but his name was Josh Goldstein. He came up on there, and he was anti-Bitcoin, not even anti. He traded Bitcoin. He was the guy that was
Uh-huh.
trading. I don't know
Uh-huh.
if you remember. It was months ago.
Yeah.
And anyway, long story short is he said to me, he's criticized Bitcoin's decentralization. When I was like, the reason why you want to be a Bitcoin, it's decentralized, and these other ones are not so much. And he's like, I question the decentralization of Bitcoin because it uses GitHub for
Uh-huh.
change proposals, and they're told that the GitHub is part of the BIP protocol, and he says that part is managed by specific people. Can you explain what the hell he's talking about here? Like, why is he saying that? Was he trying to say that it could be compromised if you can find out who those people are or something and
Well, we
compromise
know
them in
who
some
those
way?
people are, at least the
Right,
core
right. So is
devs
he saying
do.
like, could they be kidnapped and compromised? It's like seems ridiculous,
Well,
but like, is
so I don't think it would be very difficult to like move away from them if all five of
sure,
them got kidnapped.
yeah,
Actually, I think it might be four now, but yeah, like there's a certain number of core devs that do
yeah,
the maintaining, and again, they have more of a janitorial role,
yeah.
right? Like it's
I heard you saying this on
okay.
Preston's podcast
Yeah,
recently. Yeah,
yeah, it's all right, all right, here's the pull request. It is mergeable, right? Or if it's not, it's like please rebase. That's what they'll say. Um, but all right, let's see who's reviewed it. And they'll read through all the comments and say, okay, these are the concerns that were brought up. These were addressed, and therefore it's good. Click merge, right? Like that's what they would do. That's that whole process. And like for certain other open source projects where you do have like benevolent dictator for life and stuff like that. So Linux is run that way, Python is run that way, and other open source projects are run that way because it's more efficient. But essentially, you have a single person that gives the final okay, and they have like ultimate veto over
mm,
everything. And that's, I think, what your friend is
mm-hmm.
referring to. He thought that that's probably how Bitcoin works, and that's not. It's not. And that's why we have like five maintainers, right? Like if you
Well, I think what he
disagree
was
with
saying, because he said people, not person. So I think he's saying if you were to compromise in
all
some
five,
way
yeah.
or coerce them in somehow, but even if that were the case, you could just revert the changes. It's code, right? So you could always
Yeah.
fix those problems.
Well, I mean, if they were compromised, like you would
Yep.
still need community consensus for stuff like this, and you need
Yeah.
people to actually propose it or whatever.
Yep.
But yeah, it would take like it's not a single point of failure by any means, because
Yeah.
if they get compromised, I suppose that the actual GitHub repository would have to move somewhere else or something like that. But there are already mitigations in place in case GitHub goes down forever,
Yep.
right? They're like Tor hidden services where you can do that, and there's all sorts of ways in which they've like contingency plan for that sort of thing. So yeah, I don't think that's the case at all. And this is something that people that have even worked in open source development, they don't realize like just how different the Bitcoin development process
Mm-hmm.
is, because you usually do have like one or two people in charge that say okay, yes or no to every single change. If it's controversial or something like that, they're sort of the ultimate arbiter. In
Mm-hmm.
Bitcoin we don't have that. It's either consensus or nothing. And if you have consensus, it gets in. If it's not consensus, then it doesn't get it, right? Like it doesn't matter if there are good reasons to not keep it in, then it's not going to get in. And and this is the big difference between, Bitcoin and all these altcoins, is that, like Vitalik likes something, it's getting in. It doesn't matter if you have like 30% of or 60% of Ethereum developers that don't like it or something like that. In fact, that's the reason why you have so many altcoins, right? Hodgkinson disagreed with Vitalik fairly early on and went off and made his own coin, Cardano or whatever.
Yeah.
So so that tends to happen when it's centralized. But in a decentralized system, like if you can't get consensus, you just don't have it, and that's it. You don't get to put it in. That's that's how it works.
I want to move on to the Bitcoin network security, the 51% attack. This is Bitcoin's hitting all-time highs. People are looking into it again, right? So people are always the FUD, right? Well, what if it gets hacked, right? And the two potential quote unquote hacks would be 51% attack, and then we can talk about quantum computing. And if you want to just describe, explain what a 51% attack is, and prior to China banning Bitcoin mining in Bitcoin more recently, this was a concern, I guess, because a lot of the hash rate was in China. So what if there was a state attack on the miners out there? I guess that was a possibility, but that's even is gone, I guess. At this point, right?
It really is.
Yeah.
But basically, a 51% attack is this idea: if you own 51% of the mining hash power on the network, that you would control the production of blocks. So what that would mean, at least in theory, is that that one entity can control which transaction can happen. So you can't assign coins arbitrarily to other people or anything like that. You don't get to take people's coins away. But if they're trying to spend the coin, then you can sort of prevent that from happening. Now, from a practical standpoint, I think I wrote out the game theory on this in an article on Medium not too far back. But I talked about this exact scenario of, okay, what if they're like rejecting all these transactions? Then I said, well, then it would clearly be recognized by the rest of the network as centralized, and then another new decentralized consensus would form around some other shelling point. Probably like from the point where they started the empty point block attack, and a new chain would form, and all that hash power would be for nothing, and they can try again. But there would be sort of like a cat and mouse game where they tried to take over the network, and Bitcoin would basically reject the central entity from doing it as soon as it was identified as doing so. So really, like 51% attacks are much less potent than people think. First of all, because you can't take people's coins away, but second, because even if you have 51% or 75% or however much percent of the network, as soon as you start behaving badly, all the people that are running nodes would go somewhere else, because it would be very clear that you're attacking the network. So practically speaking, it's not as much of a threat as people think. Also, it requires an enormous amount of resources.
And
you
money.
need 51%, not just of the mining equipment, but you need all of the energy that's required to run all that thing. And that's not trivial. You can't just plug them into your wall anymore, right? Like the amount of power that you need to run that much equipment is not easy. You need like professionals that know what the heck they're doing. This is what,
and you're bringing this up because of a potential state attack from a government, right? Like, first of all, I think I've heard you say this on Clubhouse, like to be able to procure all of those ASICs, you're not even gonna be able to get them all. Like there's a time lag, and they just don't even make that many of them for you to be able to get them all. It's not even possible, right?
So I mean, if you try to manufacture it yourself, then you're competing against the rest of the market. So you have to be like a way better manufacturer than everybody else, or put way more money into it than everybody else. Both of which I doubt that governments would do, like just trying it.
Most can't.
And most can't, and most that would want to do it, like they don't have that kind of long-term like view to be able to do it, and nor the expertise, frankly, to produce stuff that the market often produces at a much faster rate and stuff like that. So the other way would be to go and just seize it, all right? Like and this was sort of like the fear in China, but as soon like what do you think? Unless you're like really good at keeping state secrets, and do it all at the same time, because if you do it in
Yes.
stages, people are going to find out.
Be all in the same minute of the day.
Yeah,
Right.
it has to be all at the same time. That's going to be very difficult. That requires like
Without any
military
leaks.
level, yeah,
Right.
military level coordination, and you're probably going to have to hire military people
Yeah.
or use your army to do that. But even if you get all of that equipment, again, like the payoff's not probably not going to be worth it, because there's going to be this other consensus that forms around your centralization. So, it's just not a realistic option, I think, even at a nation state level at this point, just because of the costs involved and the coordination involved. And, like we know that governments aren't really focusing on this. They'd much rather, like, it's an obscure technical thing that very few of them have any chance of even understanding at this point. So for them, like the game theory just simply does not work.
Yeah.
So that's a 51% attack. The other attack you mentioned is quantum.
Quantum. This I'm only bringing this up because a lot of people ask this all the time, right? So you hear these questions. So
yeah, and quantum is like the bane of my existence, right? Like, because people always ask about it, thinking that they're being super smart. It's like, oh,
right.
but you haven't handled quantum or something like that. Thinking, okay,
nuclear
well,
power
I'm
at that
gonna
point?
one up you and stuff like that. And
Yeah.
most of those people have no idea what the hell they're talking about. They haven't studied quantum computing in any way, shape, or form. They think quantum works a particular way when it doesn't. They think it's like some magical computer that solves things like very fast when it doesn't. They think it's very easy to build when it isn't. So, first of all, like, quantum computers are enormously complicated, and very, very difficult to build. There's a reason why it's taking so long to make even a little bit of progress in quantum computing. Everybody makes it, every journalist that writes about it has no idea what they're talking about. So they make it seem like everything is just around the corner. But it's a lot like cold fusion, right? Like in the 80s. They made it seem like it's around the corner to get you excited, to get you to read the article. But when you actually look at the science, it's like there haven't been any breakthroughs in this regard for a long time, and it's all sort of a pipe dream. And the media makes it seem like it's more than it is. So you get all these like philanthropists that are donating money to hucksters that say that they can do it and so on. And basically, it's kind of happened in a lot of big labs, right? Kind of like blockchain technology. There's a lot of tech labs out there that are working on quote unquote quantum computing, and most of them have like little to no chance of doing anything. But it's very difficult because you have to like keep things at like nano degrees above absolute zero, because at that point that's when you can sort of observe certain quantum states and things like that. The thing about quantum is that you observe one state of anything and everything else freezes in place, and so a cycle in quantum computing is making that one observation. And then once you make that observation, you have to start everything over again. It's not some like magical computing device where you can fix like 18 different variables and suddenly you can see the solution for the other one. That's not how it works. That's sort of like the popular conception of quantum computing, that you can do sort of like exponential algorithms in linear time or something like that. That's not at all how it works, guys. Hate to break it to you, but that's how journalists like to present it, because they want to make it a magic machine, and that's at least how they seem to understand it, when in fact that's not reality at all. So that's not how it works, and it's very difficult, and it has all sorts of errors because you have stuff like quantum decay. So very easy way to think about it is, atoms have a half-life of some kind, and it might decay before you get to make the observation and things, and you have to error correct for that, and it gets very, very complicated once you add error correction, because even if you make an observation, it might be an error, right? Like there's some probability that you made an observation in error and stuff like that. And there are like 18 other things within quantum that like don't have any solutions, that we don't have we don't know how to do. And the journalists that make it seem like it's around the corner are basically assuming away all of those things, saying, okay, well, we'll find a solution for this soon enough.
Yeah, at some point with Metcalfe's law, they'll figure it out, is what they basically say, right?
Yeah, and that's not how science works, right? Like, we thought for a while we can turn like lead into gold, but like that's you just give it enough money, we'll turn lead into gold. That's not how it works, guys. Like, there are fundamental laws of physics that you kind of run into, and they're not just solvable because you throw money at it. That's not how science works. So, this is one of those things that's very annoying to me, because the people that ask it think they know what they're talking about, but they don't. And one of the harder things to do is to convince people that they don't know what they're talking about. So anyway, so what you get with quantum is a lot of labs that are putting out press releases saying, okay, well, we made this breakthrough, that breakthrough. So, a recent one with Google was, hey, we have achieved quantum supremacy, right? Like, nice press release. And then you dig into the paper and find out that it's better at generating random numbers than a conventional computer. Are you serious? Really? That's what it is, right? Like, it's okay. That's like the one thing quantum should be good at, because more or less everything is random. So like, how is like, really, that's what you're counting as quantum supremacy? Like, practically speaking, what everyone was looking for was some algorithm that you can do faster using a quantum computer than a conventional computer, and the best that they could come up with was, a random number. It's just absolutely ridiculous in that way. So anyway, all that said, it's like much further away than people think, because it requires all of these breakthroughs that they've realized, I think, over the last 20 years or so, like, are like almost intractable, right? Like, we don't know a way around them. It's just sort of like an article of fate that will find a way around these things, and that's what a lot of the research goes into. But there's no guarantee that there are ways around this stuff. Like, we don't know if we can build a 1,000 qubit quantum computer or whatever.
Even if they could, there'd be quantum defense.
Yeah.
Right. I mean, that's right?
That's the other part of it. There are defenses against quantum level stuff. It's not like this magical thing that solves absolutely everything. It's by no means like that. And the thing is, like, even the really like quantum optimized algorithms are still like lots and lots of cycles, right? Like, you still need to make, I don't know, 10 to the 32nd operations, which is like 4 billion, which is very little for a conventional computer. But for a quantum computer, it's insanely high, because they're all really, really slow, right? Like, this is the thing. Like, we've had like 70 years of development and conventional computers where we've made things smaller, faster, and like optimized all sorts of things, and figured out new algorithms and stuff, and we've optimized the hell out of it. Like, you take a computer from 1950 and try to run 4 billion operations on it. It's going to take a long time, and that's essentially kind of what you're doing with a quantum. Like, you can't just be like, okay, one cycle here equals one cycle here, and therefore this has many less cycles, so it's going to take shorter. That's no, that's not how it is. It's going to be much slower, because you're having atoms at nano degrees above absolute zero, and you have to error correct, and you can't just make one observation because it might be an error and stuff like that. You have to make, well, like 1,000 observations, and you have to throw out like 10% of them because they were an error or whatever. So this is what we're talking about. Is people have this idea of quantum computers as something that's magical and that it's going to like do something very quickly, when in fact the engineering challenges behind it are enormous, right? It's kind of like trying to build a space elevator or something. It's like, oh, it's right around the corner. No, it's not. Space elevators are not right around the corner, and anyone that tells you that is just like making crap up
Ignorant
and don't know
or
how.
lying.
Yeah, like don't know the physics of a space elevator or whatever. Oh, but you throw enough money at it, it'll work. No, there are physical constraints, and you need materials that are like strong enough to make it. It's not around the corner. There are things that you have to solve that we might not ever be able to solve because there are fundamental physics constraints that we think might be solvable, right? But we haven't found it, and there's no guarantee that we ever will. So that's the state that quantum computing is in, and to present it as something that's inevitable or that it's going to happen
Right.
very quickly is just completely wrong.
Well, certainly not quickly. The
Yeah.
question is it inevitable? And then the real question is, what is the defense mechanism? At that point, you would have defense
Yeah.
mechanisms as well that are going to evolve.
Yeah,
at that
and
speed
I
as
don't
well.
even worry about that. Like
Yeah. You're
like
so far away from it. Yeah.
yeah, I like the things that need to happen to even get to that point are just so improbable to me that
Yeah.
I really don't think that's even a defense I should need to give. But it's like, oh, but assuming everything, and we have this 1 to the 2 I mean 2 to the 1 negative 100th probability of it actually happening, then what? Like, yeah, I mean, you have a better chance of like an asteroid hitting Earth and destroying it in the next 5 minutes than like that sort of probability. But okay, if we're going to assume that, here's what would happen. But it's kind of like answering questions like that. It's just such a low probability event, at least in my mind. And I mean, obviously, other people are going to tell you different based on their perspective, mostly because they have a financial incentive to tell you otherwise, because of course they're working on they're a science writer and they want to make things look exciting and around the corner, or they work at a lab where they get paid for this
or they
stuff.
work at a bank.
Yeah, or whatever. Or they work for an altcoin and they want to like
That's my
do
next
whatever.
question.
Yeah, I
altcoins.
mean, it's so transparently obvious that they're doing this for
There's an
their own
incentive.
benefit instead of like looking at anything objectively. So yeah, I like it's one of those questions that I rant on often because people like talk about this as if it's inevitable, and it's just like, this is just the complete wrong narrative. I'm sorry.
Yep. So I want to move on to, like you said, altcoins or NFTs essentially, right? So I want to know, what is it we can learn from the shit coins to make Bitcoin better? That's the first thing. The other one is, traditionally, Ethereum is the quote unquote smart contract coin, as you would call it, right? Because there's people out there, they're pretty optimistic that they think that Taproot adoption may allow Bitcoin to enter into smart contracts, and maybe there'd be NFTs on. I'm just curious, what is your opinion on that subject, and whether or not you think it's good for Bitcoin if that were the case?
Yeah, and this has been the narrative around altcoins, or why they're useful for some altcoin apologists for a while, is, oh, they're the test net for Bitcoin. They'll try something and maybe we can learn something or whatever. The vast, 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 vast majority of altcoins have no innovation whatsoever. And that's the thing. They claim to have done something different or interesting or whatever, but you look under the hood and it's like, it's a half-baked, half-assed idea, and it doesn't have any basis in whatever. So, I mean, like, it's kind of like saying, okay, well, we got a bunch of nuclear physicists, like, and there's a bunch of kids drawing with crayons like nuclear, like pictures of nuclear power plants or something like that, and saying, okay, well, maybe we can learn something from those people. It's kind of like that level of difference. I granted there are some things that, like, say, Monero is trying stuff with confidential transactions, ring signatures, and using ed 25519 or something like that, which is, granted, those are all different than Bitcoin, so maybe we can learn something about it on that. But like, vast, vast, vast majority, it's a kid on the playground with a crayon thinking that they have something to teach a nuclear physicist, right? Like, that's the level of difference, because really they just copy the code, and even if they're even halfway competent, they don't fix any of the bugs or like do any of the things that would make any sense. It's always just sort of like, let's come up with something that will confuse enough people into thinking that we're actually smart and get them to invest in us, and that's it.
Mhm.
So I don't believe that narrative that
Okay.
that all coins have something to teach us.
Let me
Um,
ask you this, because
yeah.
Jason Williams,
Hmm.
he was saying that he thinks that it might be an entryway into cryptocurrency in general, right? For
Hmm.
Bitcoin, right? So there was a lot of talk. You've probably seen a lot of frogs in your Twitter feed over the last couple months, right? So there's the chill frogs, then the rare pepes.
Hmm.
Rare pepe, which is kind of interesting because it was, a lot of people didn't realize, I'm sure obviously you do,
Hmm.
that it was on Counterparty, which is
Hmm.
essentially Bitcoin, right?
Well, it's
Um,
counterparty runs on top of Bitcoin
on
through.
top of Bitcoin,
Yeah.
right?
Yeah.
Yeah. So this is kind of re-emerging, I should say, over
Hmm.
the last couple months,
Hmm.
because some real OG Bitcoiners have been kind of messing around with it and stuff and bringing it to light. Jason's worldview on it was, you get people into it, and now they're on the Bitcoin. They're doing this on top of Bitcoin. It brings people into Bitcoin because it's denominated in Bitcoin. What do you think of that, and other things that could be on top of Bitcoin like that? Just for the perspective of people come in. What does Max and them say? They come in for the money, but then they stay for the revolution, right? Like,
Yeah.
right. So, what do you
So
think of that?
is it possible that they come in for the altcoins and stay for Bitcoin or something like that?
More importantly, what I'm saying is they come in
Mhm.
through like a rare Pepe or something like that that's on top of Bitcoin, and then they have it denominated Bitcoin. So they essentially own Bitcoin, and
Mhm.
then at some point they realize, why am I messing around with this stuff? I should just own Bitcoin. But they
I
came
mean,
in for a different reason.
possibly, but I mean, the stuff is just so far away from what Bitcoin actually represents,
Right.
that, like, I think, and I think you would agree. Like, I think Bitcoin's going to take over, and I think people are going to learn about Bitcoin one way or the other anyway. And whether or not they get in through a rare Pepe, which I kind of doubt, or like NFTs or whatever. Maybe they do some investigation. Maybe there's a small minority where that happens, but I'm sure there's small minorities that enter all sorts of ways, right? Like maybe they enter through darknet markets or something like that. And there are
Mhm.
certainly people that did. Doesn't necessarily mean that, okay, we need these things in order to make sure that they come into Bitcoin. There's no real need for them per se. It's just that these things, as far as I'm concerned, are all pretty scammy, and you have to trust the creator or somebody in order for that particular coin to work. And this is why you get rug pulled, because not everyone's trustworthy, and even if the current person is trustworthy, there's a very good possibility that the next person won't be, and you'll get rug pulled then. So,
Mm.
this is the thing about altcoins is, they all want to justify their own existence, just like anyone that has a job wants to justify their own job, even if logically, like, from an objective standpoint, they would never be convinced of it if they weren't in the job. But that's kind of how it
Exactly.
is, right? Like, people use their mental capacity in all sorts of ways, and this is one of the more evil ways, is rationalizing whatever the hell they're doing, even if it's very evil. We talked a little bit about that with the quantum computing stuff. A lot of people that work in it will justify or make it sound like everything's around the corner when it isn't,
Mm.
because it justifies their jobs. And altcoins are no different. They're going to make it seem like, put it in the absolute best light possible, because they nobody wants to think that they're a scammer, right? Like, no one wants to go around and tell people, oh yeah, I scam for a living or whatever. I mean, maybe Richard Hart, but that's about the only guy I can think of. But everybody else is like, okay, you know what, like, I'm doing something good for the world. I like, otherwise you're not going to be able to sleep at night. So, for me, like, the all of these altcoin narratives, that it's testnet for Bitcoin, or that it helps people, bring people into Bitcoin or whatever. Those are all for me, like, narratives that are made up by people that own both Bitcoin and some altcoin, and they're justifying that altcoin's existence or something like that. And I don't know. I don't subscribe to that, because I think that's just being an altcoin apologist of one kind or another. And yeah, that's what I would say.
Okay, I want to move on to the plan B stock to flow model. So I've heard you talk about this. You seem to be supportive of it, at least in the sense that it hasn't been broken yet.
Mhm.
I don't know if you've dove into the actual analysis and what he's done and whether or not.
Mhm.
Why don't you tell me? Because you and Corey from Swan,
Mhm.
Swan Bitcoin's founder Corey Clipson, you guys were kind of going at it yesterday, and he's clearly not a fan. You seem to be somewhat of a fan, at least that it hasn't been disproven, I guess is your
Mhm.
point.
Mhm.
So why don't you just tell us what you think of the stock to flow though?
Yeah, the thing about stock to flow that's interesting to me is that it's like any data model. What you're supposed to do with any data model is you make predictions based on like a certain amount of the data. And if you're testing it, you hold back some of the other data and see how well it predicts that other data. And that's how you sort of build a model and so on. And based on that, if you look at how stock to flow is made and so on, it's based on the current stock of Bitcoin, the current new supply of Bitcoin that's entering into the Bitcoin marketplace. And I've interviewed Plan B on my podcast, and the way he explains it is, okay, well, I was looking for a measure of scarcity because that's what I thought people were wanting in order to that was the reason why they were buying Bitcoin. Does scarcity matter? And his thesis was, okay, scarcity probably matters. How do you measure scarcity? Stock to flow is a very good measure of scarcity because you have the new amount of Bitcoin coming in versus the current amount that already exists. So it gives you sort of like on a relative basis, in a continuous way, a way to measure how scarce something is. And he ran this analysis on Bitcoin, found the formula that would work based on, okay, well, here's the exact supply schedule, we know
Mhm.
about it, and it halves every and we know the new supply coming in and everything else, so we can calculate stock to flow over its entire lifetime. So that's more or less predetermined. Let's see how it's performed against the stock to flow chart, the actual Bitcoin price against the stock to flow chart, and he found a correlation. So that's the stock to flow model, right? That's what
Yep.
it is. It was motivated by trying to figure out what is the motivation for Bitcoiners and why they buy it. If it really is scarcity, then it should have some form of correlation to it. And that's what he found was there's some correlation here. And and based on this, he made a couple of predictions. During his initial one was, during the next cycle, right after the next halvening, we're going to see at some point like price go to somewhere between 55,000 and 200,000, something like that. And basically he came out and said, if it doesn't reach 100,000 by the end of 2021, then my model is wrong. We haven't reached the end of 2021. So I find it very annoying that people like Corey like dismiss it before the prediction has a chance to finish.
It's
So
getting
if
there.
like he could crow all he wants on January 2nd, but like until like you see the actual time has passed, he made a prediction, right? Like this is how
Yeah.
he tests science, is you make a prediction, and if the prediction doesn't come through, you have to either tweak the model or come up with a new model or something like that. He
Yeah.
made a prediction specifically 100,000 by the end of 2021. And you have all these people, and it's not just Corey, right? There's a bunch of other
Yeah.
people that go against stock to flow that were saying, oh, it's stupid, like back in March. I'm like, guys, it's like 9 months away until like his prediction either comes true or not. You could crow all about it once the prediction doesn't come true, but you don't get to say it's invalid until the prediction either is true or not. And that's the part that really annoys me, is I'm not necessarily a supporter. I've been watching this thing like everybody
Let it
else,
play
and
out.
and this is something that I've been fascinated with this whole cycle, because it's like this has captured the imagination of a lot of people. Plan B has like 1.3 million followers for this reason. Is this predictive? Does this give us insight into, something within economics about scarcity? Do the happenings have this effect that Plan B models? Yes or no? Like that's really what we want to know. And for me, it's a scientific inquiry. Also happens to be on an asset that I own a lot of. But that's a deep and interesting question, and we want to know the answer. I get it. Maybe you think the answer is no, that like it isn't about this particular measure of scarcity called stock to flow. But you don't get to dismiss it just because you happen to disagree or don't like the model or whatever. Like that's not how science works. You get to, if you make a different prediction, great. Like go make a different prediction, or say the prediction is going to be wrong. In fact, go bet money on it if you think it's that convincing. But like just crowing and saying it's not true already when the prediction hasn't happened is very annoying. And it's to me like not like within the bounds of like scientific inquiry or whatever. And the thing is, if it does hit 100,000, I mean, I can't see Corey saying, "Oh, stock to flow is right now." My instinct is what's going to happen is all those people that were quoting and say, "Oh, it's not going to reach this number," or if it does, it's complete coincidence. They're going to stick to that line. It reached that because it's coincidence, and they're just going to continue disagreeing. And it's just like, guys,
he did. I did you see him on Pomp? He was on the Best Business Show. Great name. Recently, and he was kind of saying that the model will break at some point. He's absolutely certain of it, just because of the law of large numbers. He didn't say it that many words, but that's kind of what he said. So basically, I guess it's going to get to a certain point. I think he was saying when it gets to, is it 100 trillion or 10 trillion? I can't remember what number it was. He says maybe it's 100, which is his username too, I think, right, on Twitter. But a certain model, he's like, it just doesn't work the same anymore. Moving after that, he's like, it's unpredictable. But he thinks it's predictable. He thinks it'll hit this cycle, but he thinks that maybe in the next cycle, it may break in the next 1 or 2 cycles, is what he was basically saying.
Yeah, and he has a different model that he came up with based on other assets, and he analyzed their stock to flow, and so basically showed that they are along this interesting trend line, and that we didn't really know before, right? Like it was like, oh, okay, that's interesting that it's all on, silver, gold, diamonds, real estate. They're all along this trend line based on stock to flow. It's like that. I mean, that's what scientific inquiry is all about, is looking at stuff like that and saying, okay, they're all falling within this reasonable range. And if Bitcoin falls within that reasonable range, here's what the price should be. And he predicted based on that, on this cycle, 288,000. So that's the other prediction that he's made, that okay, sometime in this cycle we'll get to 288, and that's another one that we can say. And if that one is wrong, then we can say, all right, stock to flow X is wrong. Yeah?
Jimmy, he actually set up to Pomp that he said he's going to time the market if it does a parabolic move to the upside, because he says it shouldn't go above 288 is his guess. He goes, but if it goes to 300,000 to 400,000, he's like, I'm probably going to time that, but I'm not going to tell anybody. I'm going to time that because that will like just sell off the market, obviously.
Right. He's willing to put his money where his mouth is in that sense. So like in a sense, like all these people that are saying it's wrong, like you could argue the model all you want, but the prediction is there. There's a specific prediction that this thing makes. And if you want to bet against that, then do it, instead of crowing or like just complaining about it, which is what it seems like to me. But you could quote all you want if Bitcoin closes at $70,000, by December, never reaches 100 or whatever. Quote all you want, right? Like, great, you were right all along, great. But like to say, okay, well, it's completely invalid right now, and it doesn't matter what happens at the end of the year. It's
I'm with you. It's unbelievable marketing for Bitcoin. So why would you talk shit about it? So far it's not been proven wrong, and it's great marketing for newbies, right?
Well, it's part of it, but I actually think it says something about economics, right? Like, because you do want to measure scarcity, and there is something about scarcity that attracts people to Bitcoin. There's only 21 million. I know that was the reason why I was like, oh my God, then I better get in, right? And like new coins entering, and like sort of like how humans act and stuff like that. These are all things that you have to like, that we don't really understand how all of that like sort of interacts. And this is a genuinely new theory in economics about like measuring scarcity, right? Like that's not something any other economic theory ever really takes into account with respect to a commodity, is specifically measuring scarcity, and then like based on that trying to figure out what how that affects price and things like that.
I think I don't know if it's your line, but you say it all the time, which is that Bitcoin is the most credible scarce asset on the planet. And
yeah,
I've heard you say that a million times, right? And
yeah.
right, but the reason why they can't do it with other assets, I think, in commodities, is that we don't really know what the supply is actually.
Yeah, and we and it's all sort of variable based on human ingenuity. And it's there's no sort of law of nature that says you can't go dig up more gold or anything like that. So there are only sort of limitations based on like the equipment we have and the technology that we have and so on. So you can always sort of like advance
Turn
on
it
those
up.
bases. Yeah. So it's this very weird situation that we sit in, where you have a bunch of people that are just absolutely against stock to flow for whatever reason. I don't know. Maybe they don't like the model, or they don't like the math that's being used or whatever. But I actually think there's something genuinely interesting about measuring scarcity and talking about Bitcoin in that way, because intuitively there is something about scarcity that attracts people to Bitcoin.
Well, that is the whole thing about Bitcoin.
Yeah.
To me, the whole thing about Bitcoin is that it's truly scarce, right?
And we have one way to measure that, right? Like, and if we had another way to measure that, great. Like, let's see if that correlates or something like that.
Sure.
But this one in particular, it has a rationale that has some, possible credibility, and we measure that credibility by the predictions it makes. 100,000 by the end of 2021, 288 based on the S2FX model. We have two different models making two different predictions, and we watch and see if that correlates, or if those are proven correct or not. That's what science is like, right? This is what like studying something and measuring something and making a hypothesis and seeing if it's correct, instead of like just sort of dismissing it out of hand. Oh, it can't be correct. It's just not. And, like for this reason, this reason, this reason, or this reason. And people were saying that about Columbus, right? Like, oh, he's not going to make it to the other side, either because the earth is flat or because the ocean's way too big. And, he's not going to make it all the way to India with the provisions that he has or something like that. Like let it play out, right? Like,
first of all,
this nice reality.
I don't want to digress, but like the world is flat. Like, what did they think? The ocean just fell off? Like, where did it go?
Yeah, I mean,
there's a wall. It's like a pool.
I mean, a lot of people thought the world was round back then, and it's like played up that they were so primitive that they thought the world was flat. That's actually not how it was. There were some people that did, but a significant number, especially of the scientists at that time, actually thought the world was round. Plato, even way back then, thought the world was round and everything else. But there was this ability to like, try to measure how big it was. And Columbus was actually wrong on the size of Earth. He thought it was much smaller, so he can make it all the way to India. But when he went the other way, he just found this other continent in between, despite being wrong. So, like there are things that we can learn, and it could very much be like Columbus, right? Like where we think it's, one way, and then we tweak the model a little bit, or like take it into account in another model, and we get something much more accurate and so on. But it's an opportunity to learn. And I like dismissing it out of hand is not an option when you have something that's genuinely new and genuinely interesting and genuinely makes predictions. We can watch and see if it does something. Or
I'm with you. All right, let's move on. Next question. What technical implementations have you the most excited about the protocol for Bitcoin moving forward? What are you most excited about?
Well, I'm excited mostly about Lightning because I think it enables. Well, I hate that Web 3.0 has been like taken over by altcoiners to make it seem like it's something else. But I coined it first. I told people that Web 3.0 is the decentralized web we always wanted that's built on top of Lightning. That to me, I think has some serious potential, and we're kind of starting to see it with Sphinx Chat and the podcast index and stuff like that, where you can essentially like give like make content for money or like transfer content for money and do it in a peer-to-peer fashion, instead of having some entity in the middle, which is what happens when when you're doing almost everything else, right? Like you have to go through Uber to get a taxi or like a ride from somebody basically, and they're the central party that controls all the inputs and outputs. So now I have to wear a mask every time I go into Uber because that's like sort of the thing from the central party that they're able to impose on everybody. So, instead you have direct peer-to-peer connection that's available, and you can do some very interesting things like get directly paid, and you're kind of uncensorable at that point because no one has to come and subscribe to your stuff. But no one can prevent you from doing that either. But when you have a central party, when you have to trust someone, they can take that away, right? It's the content. Yeah, it's the content equivalent of a rug pull, and that's what they can do. And we're able to take that away on the Lightning Network and do all of these interesting things. But it requires people to be their own server, right? Like we talk about being your own bank, and that is kind of like being your own server. But like not just all your financial stuff, well, although that's very important, but all of your content and digital stuff that you create. And you can be your own mail server, right? Mail service. You can be your own postal service essentially, and like have all your email hosted yourself instead of at Google or something like that. You can have all your tweets hosted yourself and distribute them to whoever wants it instead of relying on Twitter. And you could be your own everything. And that's I think going to be way more powerful than people think, because you're uncensorable at that point. And I think that's something that a lot of people are realizing has significant benefits, because if like you have a walled garden that like imposes certain rules, you're subject to their whims and so on. So yeah.
It seems obvious that institutional money is going to find its way into Bitcoin. It has been, and it will continue to do that as long as the interest rates remain at zero, which I think we both agree that they're not able to really raise those. So I think we see the adoption. It's just going to happen, right? With there. But how do you get the retail market to get to get Bitcoin Bitcoin adoption before the institutional money really comes in, right? Because I mean that's why we're on Clubhouse and why we do what we do is to try to get the retail market in. In your opinion, what is the best way to get retail to adopt Bitcoin or understand Bitcoin?
Yeah, I don't know. I think they've been doing a good job already, right? Like a lot of retail.
But I mean, there could be a slew of capital that comes in from institutional over the next couple of years, right? And the price can go parabolic.
Right, but already like
it'll always go up
million people in America, I think, have
46. You said right?
46 million. I think that was the latest report.
Yeah.
Have some
even
crypto.
Tim Cook as of today. Did you see that article?
No, I didn't. But
Tim Cook said he owns Bitcoin.
But like just about anybody you ask that's in tech in some way owns Bitcoin. So it's really the people that aren't on board. They're afraid of it, or
Doctors,
they have ideological reasons for not getting into it or something like that. And those, I don't know if you can necessarily orange pill very easily. Now, true. Now it would be great if they got in, because screw these banks and stuff like that, right? But like, is there one strategy that's going to work for all these people? I doubt it. If there was, and we'd be in a lot more trouble, right? Because they can use that hack against all of us for whatever it is that they want to do. The thing is, I think it's done so well. Number go up is really the best sort of like marketing ever, because every time it goes up, it makes the news or whatever. And I mean, I know like a bunch of people are coming into Clubhouse asking newbie questions and stuff like that. Because even in the last few days, because of the all-time high, that's a normal sort of adoption pattern, is that when there's sort of like a critical threshold of people that have it,
It's on the
then
6
more
o'clock
people
news all
come.
day.
Yeah. That's when people come in. So for me, I don't think we need to like worry too much
Price is
about
great
that.
for marketing. Yeah.
Yeah, I like just get the people that you care about to adopt it, because
Yeah.
like really you don't want them left on the ark. And this is how like a decentralized adoption happens, is that each person goes and gets, you know, their friends and family like adopt it, to adopt it based on the fact that, you know, like they care about them. And
Yeah,
I
because
think that's
honestly,
happening
like,
right now.
you know, when I tell people that I know, like
Hmm.
friends and family, that they should buy Bitcoin, it does nothing for the price of Bitcoin if they buy
Hmm.
Bitcoin. It
Yeah.
doesn't matter, right? Like, it
Hmm.
literally does nothing. I'd need, like, even if Michael Saylor comes in with like $100 million, it really doesn't do much to the price of Bitcoin at this point. It's a $1.23 trillion asset.
Hmm.
So it doesn't push it. I mean, 100 million would, but like, you know, 20,000, 100, that's not going to do anything. So you're really telling somebody because you care about them. That's the real
Hmm.
reason why you're telling them.
Yeah, and I think at some point people figure that out, and you know, enough of that will happen where you'll get a lot of retail in. Whether or not it's before or after institutions, I don't know. But
Mhm.
I mean, we do know that a lot of money is coming in. We have a sovereign
Mhm.
country buying it up. I think El Salvador has like almost 1,000 Bitcoin at this point.
Mhm.
So you know that it's all happening. And like we have a saying in Bitcoin: you get into Bitcoin at the price you deserve.
That's right.
Because you know, like if you're going to wait, or like you're not convinced of something, you know, I'm sorry, but
Have fun paying
that's
for it.
yeah, I mean, that's kind of your fault, right? Like
Yeah.
what? Yeah, we've had all this material out there for a long time. I've written books on this subject. Lots of people have written books on this subject, and you know, they're all there trying to guide you to this thing. But if you don't, we can only bring a horse to water, can't make you drink. And yeah, that's
That
what we've done.
that brings me to my last question, Jimmy, which is, why did you choose and decide to say yes to come on Outside Money with me? And more importantly, why do you do what you do? Why do you put yourself out there publicly? Why do you write the books? Why do you go on podcasts? Why do you have a podcast? Tell everybody why you do what you do.
Well, I came on this podcast because you asked, and I like you, so I don't know. Like that's you know, if it was somebody that I didn't like, I probably would have said no. So there you go.
Thank you.
But the reason why I do what I do is because, well, I enjoy it, right? I'm an extrovert. I like talking, and I like you know, like sort of sharpening like my monologues, I guess, as I practice them on shows like this. That whole monologue on quantum, yeah, I've done it like 50 times, so I could say it over and over almost in my sleep. So you know that you know, getting some reps in there is fun, and like talking about this stuff is fun at a purely selfish level. But at a deeper level, I think it's because I want to see sound money like really come into the world. I think it really does fix a lot of like sort of societal ills that people get obsessed with. So you know, a lot of what we end up having to spend our time and energy and money on is, you know, because of fiat money, because of central banking, because of the sort of the way the system is set up economically. And getting free from that, I think, would be a major boost to the world. And once that happens, I think it would be a good thing for civilization, a good thing for my kids and my grandkids and my great grandkids, and you know, the you know, as part of the legacy that I leave behind and stuff like that. So yeah, for me, it's a very long term thing. You know, I also tell people like Bitcoin's been good to me, and I want to be good to Bitcoin. So I suppose that's a part of it. But yeah, I do this stuff because I think it's good for people, and I enjoy it. I think it's a win all around. So yeah.
Thanks for coming on the show, Jimmy. Appreciate you. Always appreciate your insights and always enjoy listening to you. Where can people find you? And is there anything you would like to talk about that you're coming up on, speaking gigs or anything like that?
Yeah, so I'm on Twitter at Jimmy Song. That's probably the easiest place to find me. But if you want to contact me directly, subscribe to my newsletter and hit reply whenever the newsletter goes out. It's jimmysong.substack.com, and it's I send it out every Monday. And yeah, if you want to contact me, just hit reply on that, and it'll get to me or whatever. I have a Medium blog, jimmysong.medium.com. I have YouTube channel, Off Chain with Jimmy Song. I have my podcast, Bitcoin Fixes This. I've written several books, Programming Bitcoin, Thank God for Bitcoin, the Little Bitcoin book. They're all available on Amazon and other stores that carry them. But yeah, those are the main things, I guess. Probably going to write another book fairly soon. So look out for that. I'll probably have a Kickstarter and, like, to raise money for the book and allow people to pre-order it signed and so on. So that's the plan. And yeah, that's about it, I guess.
Jimmy, thank you. And goodbye to everybody else. Thanks.
All right. Thanks.